All right, ladies and gentlemen, I hope you had a wonderful weekend. The market was absolutely carnage last week. The month of October is now red. The 10-year bond is at 5%, and now the market is faced with an interesting ultimatum. And this week we have earnings from some of the biggest companies in the world. So, Chad, we have a lot to talk about. I have the breakdown of the week. We're going to go over the earnings. That market ultimatum is in reference to a Bank of America note that came out on Friday. I'm going to share some things about what people are saying, but we still have a lot of data and even Powell this week, and not to mention those earnings again. So I have all that for you, a couple of plays, what I need from you, a thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/The Stock Market. We will see you there in the morning, baby. Free 99. Run it.
Working to the couch, it's a 20 less. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but the sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
Right off the bat, I almost forgot the random account generator. It's kind of bittersweet here because I need to move this account, so we may get delayed on it by a week or so. So make sure that you post a random play. We need a random option. Post it in the comments of this video. Keep it below $100, and we are going to do a random comment picker and pick it tomorrow morning. But now, the latest play was the Tesla. From about last week, I sold it out for like a 300% profit. It would have brought us up like right back up to here. I think it closed like $10 in the money almost, or a little bit more or less, give or take. But either way, that's the Chad. So Chad, run it up, baby. Post a random play. But now let's talk about this week and what we have to deal with, because there's a lot. Even before we get into the calendar, I will tell you there's a lot of other events in the background. I believe on Monday, you're having the governor of California, Mr. Newsom. He's visiting Shanghai and Beijing. He's going to China. Tuesday, you're having a UN Security Council open debate on the Middle East. And now this weekend, what happened with the whole Israel-Palestine Middle East war dynamic? Well, we were worried a little bit on Friday. There was prisoners released on Friday, and that was actually some of the only good news you had on Friday, but we still ended up lower. But there was prisoners released. There was news of aid coming into Gaza, but then there was still news of more fighting over the weekend. So it's borderline going to be the same situation and wait and see from last week. We're going to get headlines back and forth that are going to move oil. So it is still a volatile situation. There's no real finger we could put on it just yet. So I would bid you to pay attention to earnings and the rest of the market, and then we're going to go day by day as all those events start to play out. So there's going to be a lot of other events, but getting into the calendar before we get earnings, Monday, there's not going to be much, and as you'll go through the data, you'll get some stuff overseas, but the real action economic data-wise, it is going to be happening on Tuesday. You're getting PMIs from everywhere. The EU, Great Britain, the United States, and I think even Germany, they're part of the EU, and then there's one more country involved, but that's going to be a big deal. And then Tuesday earnings, Microsoft and Alphabet, and that's the day of the UN Security Council. Then Wednesday, this is where it gets good. You're going to get real estate data. There's new home sales. Even Thursday, you're going to get pending home sales, and then even gasoline numbers. But you have Powell. And this is where it gets interesting, because the earnings on that day is going to be IBM and Meta. But why I'm saying this one's going to be interesting, because no matter what happens beginning of the week to set it off with earnings or towards the end, whether it's with earnings, war, whatever you could think of, you're going to have Jerome Powell right in the middle. So as long as he's talking monetary policy, that's going to be interesting how it moves things. And like I'm telling you, Thursday, you're going to get Amazon earnings, and then durable goods, as well as the pending home sales, and then Friday PCE. That's going to be important, but really all the action is going to be Tuesday, Wednesday, Thursday, and then Friday you're going to wrap it up with PCE data. But all of this is so important because of what we saw last week. So this is a 1 month chart, but I want you to see how a couple weeks at a time how the bonds have played out. We've been going from spending 2 weeks going up from 4.3 to 4.8, coming back down to 4.5, and then spending spending another 2 weeks going from 4.5 to 5%. With everything right below 5%, this is what I'll tell you. All data is going to be important. If that data finds a way to move the bonds and get the 10-year above 5 and the rest of the bond curve going higher or lower, that data, those earnings, those are going to be important. So this week, I would pay attention to everything borderline equal, but history would tell you PMIs and PCE are the most important in that order. PMIs move the bonds more than PCE, and then PCE is the most favored gauge of inflation for the Fed. So we'll watch how that plays out, but now let's get into the earnings. I'll show you the borderline or the overall calendar that we have, but I want to give you one of the main things I will tell you for earnings. I was going to go over on this watch list and give you a breakdown of all the earnings previews. Not all of them are available now, so I will give you that on one of the watch lists, but the reason why I wanted to show you everything, I want you to understand which earnings is coming in with a lowered guidance or not. You are going to have some of your favorite companies this week: Microsoft, Alphabet, Snap, Visa, 3M, IBM, Meta, Amazon, Intel, Ford, Chipotle, Exxon, Abivi, Chevron. I'm telling you, if you break it down to a list of all the names this week, these are even just a majority of the bigger ones. There is a lot of companies, but what I think the main theme is going to be this earnings, you have to beat. Yeah, I know that may sound simple, but we've seen a lot of weird earnings, especially as of late. Bad news may be good. Good news may be bad. It could have been worse. They came in lower, but it wasn't that bad. In this case, I think the market is looking for good earnings, and I also think in the reverse respect, the Grim Reaper is lurking, meaning if you report bad, you are going to get killed this earnings. However, look at Netflix and some of the others. We've watched a lot of like flights to safety to a degree after the earnings. If you beat and you come in above expectations, I think the market is going to reward it. Everything else, I think if you don't have a great report, you are going to just be stuck to the mercy of bonds, the market, and then the overall sentiment. So that being said, watch out for all the earnings companies. And I guess that's a good time for now. Let us get into the plays. Because right off the bat, I was going to start with all of the main earnings. So Microsoft and Google, these are going to be the first two on Tuesday. I don't have a play on any of these. I may want to watch how they play out, but the one thing I will look for is the 2 standard deviation earnings. We went over this one in the last earnings season, and it played out pretty well. And what I'm looking for is the earnings that are 2 standard deviations or double what is priced in. The stock right now is at $325. You take the price of the put and call at the money. If you add up the ask of $710 and $920, that's like $16 priced in. The stock is at $320. That's about 5%. But if you double that $16 to $32, go out of the money and see how much those cost. So that would be like just under the 300s. These are about 50, 60 bucks in a weird way. Microsoft to the downside, it is priced pretty cheap within 2 standard deviations. This is the ghetto standard deviations. I'm giving you the quick rundown, but again, do the math to the upside, another $30 from $325. That's going to leave you at like $350, $360 for the weekly. They're not too bad of prices. So this is what I'm going to be looking across the globe, or not globe. I meant to say board. I'm down with globe. I mean, we could take that, but go through all the numbers. Microsoft met criteria. That was just an example, but Google, Amazon, all these companies, they will be big. I'm going to try to control it with a couple of plays, and then at the worst case, we are going to take a cue and learn what these companies are saying about sympathies or any other plays or the borderline economy. So that's going to be play number 1. Watch out for that. Then play number 2. This one is actually related to the point I was supposed to give you early, but I forgot that market ultimatum and the comments from Bank of America. So what you're looking at, it is part of a note from Michael Hartnett, and he came out with this on Friday, and he was talking about the 10-year being so bearish and how the market's looking already. It's pretty bad, and it is sufficiently bearish. He is calling for extreme fear leading to a buy the dip moment, and now he is talking about the Q4 rally. Now, you've heard me talk about October seasonality. This is kind of in line, but Michael Hartnett is more of a bear, but the way he is putting it is simple. If the market can't hold 4.2 thousand on the S&P with this level of bearish in the bonds, then he is saying there may be imminent risks of a credit event or a hard landing. So he's saying that we either buy the dip and get a quarter four rally, or the market is going to have a hard landing and we're going to realize things are very, very bad. So I thought that was very interesting because I'm sure we are going to spend another week of juggling all of this data, the war, Powell on Wednesday, all of the earnings and everything else in all of this swings. As the 10-year, 30-year, all of that moves, especially around 5% on the 10-year, people are going to have these reactions. So it's going to be interesting. But now how that ties into the regionals, because look at KRE. There was a bad earnings from RF, Regional Financial, on Friday, and they really got clapped. But the whole regional index now, it's getting to the point of like middle of finding out not only SVB was going to get destroyed, but also that we had a problem with First Republic. So this is where it's getting interesting, and I'd say maybe he's on to something. We either get out of this little pocket here, the earnings are good and people feel good, and then we worry about all the problems till next year, or we worry about the problems till next year because some of the problems from the beginning of the year already start hitting here, and then we see what happens. But we'll find out either way. There's not going to be a disappointment or shortage of plays this week, so keep an eye on this one and watch out for that, not to mention oil, defensives, all of the other obvious ones from the last couple of weeks. But that's play number 2, and then finally play number 3, OKTA. We caught this one on Friday. We caught the news super early. We did not make a play on it, but some of you even FOMO'd into it, and they still made 3,000%. But it was a report of another cyber attack, and really, I think in this environment of war, coming off of the headlines of even MGM not too long ago, strikes and everything else, but especially in cyber, they're getting rewarded if they're doing their job, but if they have bad news, they're getting destroyed. Watch out for this play. It's either going to get a lot worse coming into next week, or they're going to have a bounce, and then be on the lookout for news. I'm telling you, either be on stream, get the stream alerts, but there's been a lot of individual news events throughout the day, and we've been catching a lot of them, whether it's investor, activist news, down and stuff like this, but they are creating interesting opportunities. And I will tell you, if that does happen, look for some of those cheap options. Don't forget, especially things are slow and it seems like big news and there's small reactions, you got to watch out because they could burn you. But we've seen a lot of wild stuff so far. So that's play number 3. Watch out for that. Other than that, keeping a slight eye to some biotechs like last week, riding with the earnings, looking for the safe havens if they report good, and then seeing what happens with the bonds. But Chad, that is your watch list, ladies and gentlemen. Make sure Hydra Healthy ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, amor fati. Momentum mori. That's another one, but amor fati. Okay? Everything happens as it does, and make sure you create a meaning to certain things, because certain things won't have meaning. If you, I don't know, that sounds... That sounded so generic. I just looked at you with the face like, you better feel me, dog. You better feel me right now, Chad. I hope you had a good weekend. I hope you bring it into this next week, Chad, and let's see where it takes us. Wrap up October before you know, man, it's like literally already Thanksgiving and Halloween and all of that. And oh my gosh, but Chad, I love you. I'll see you in the AM and horn. If you feel me, you feel me.